you need to shift your focus or improve your life in any way you want. However, the time to use these affirmations. Hey, this is Ed. You're learning how to do technical analysis and live in the stock market. I have another channel which I'm going to share in the content below in the chat. And I've been trading for a few years, and every so often I'll share videos. This time I'm going live because I felt like showing you some of the tools that I use that help equip me to be a good trader during the day. So I'll use a brokerage account. And without further ado, let's check it out. I'm going to share my screen and how technical analysis affects your life. It can slow the roll a little bit, and that's really important. That's been really important to manage the emotion of the day, to understand there's so many different things going on every couple of minutes that there's nothing that you do now as opposed to in a couple of minutes that's going to make or break your trade. It'll actually make it probably easier to manage risk and emotion. And I will share some tips. Looking at a stock called Citi. Everyone's heard of Citi. I've been prone to look at charts whose activity involved millions of contracts per day. That's important because it generally means it's going to take a lot to move that stock. So for beginners, it's probably a great idea to be considering it in your study. And the first thing I'll show you is the 3-year chart. If I was to have money, we'll just call it some $55 3 years ago. Today I would be up at about $75 or a gain of $20. Okay, you can do the math. And so 10% is about $6. Let's just call it 5. So we've gone up $25. That's about right. A 50% gain on the stock. So 55 divided by 2 is about 23. All right. And so we are up from 55 to 74, a little more than, what is it, $20? So again, yeah, it's a good substantial gain. Next thing I do is I choose these indicators, the moving averages. I choose the 20, the 50. They are most effective in times of contraction because very rarely do you see a stock really test those long-term goals. In fact, when it was in decline, it would reject. When it was increasing, it would bounce. And now we're kind of flattening, so it's kind of touching it and moving off of it very much. So Citi is important because it's doing better than others who are still struggling to capture that long-term range. So the first thing that I try to do is analyze where are the heaviest traded days. January 16th appears to be one, and I've already drawn a line horizontally at that price. On January 16th, the price was around here, 72.50, and we're pretty close to that. So I've marked that as the bottom of a channel because I saw a lot of volume. So today we're working in this sort of channel. We're toward the bottom of a channel. I could have drawn probably for volume of November 6th. You'll notice that I have some tools that I can use on this chart to draw lines. I'll grab that line drawing tool. I'll draw the price right here because, as we said, on a high volume day in November, the stock went from this intersection of red and blue to that spot right up there. It went to that spot, a big move from 65 to $68 or 64 to $68, a big gap. We haven't filled it. It's possible we will. In fact, it's probable we will. And when remains to be seen. So now we have, I'm going to leave it at that. Um, and then the first thing that I do when I've drawn something is I go and I save it for posterity. In this case, I'm going to use a standard traditional way to name it so that it makes sense in the future. When I save a chart, they're all going to start with 2025. Those in March are all going to start with 03. 25th, I can then scroll through my saved charts and look for a ticker. The ticker, as we said, is City. This is the 3-year chart, so I'll type in 3-year. I will make it my default. So, what amounts to information. And now we have it a little bit more structured. I believe that the stock lines, the middle is probably a strong place of support. It's serving as support. Should it have a bad day, it could come down and test the bottom. Why I like the 3-year is during a contraction, I had to go way back to see the last time a stock was trading in this range. And so Citibank is one of the most healthy ones. I just had it on a watch list and noticed it after doing analysis like this. I'm going to show you the monthly chart because it's relevant. People will say we're in a, oh, we're bouncing back. Oh, we're rebounding. But really all I'm seeing is we started the month at $80. We're now down to 74. The wick is way down, which means we may be done selling. And on the monthly chart, you could see that top range was primarily where we were. And the bottom range is where we were for a short while, but they're calling it a wick. So last week's activity might be described as a wick. So I'll give you the perspective that I have is because we're going down according to the monthly. So we use the nomenclature of year. We'll say March 25th. We will say 3-year monthly. We won't make that our default. It's just a recollection, and we can get as excited as we want, but we got a long way to go if we are at all going to change our perspective. I'm very bearish on it. It's time to be quite cautious. If I look at the weekly, am I going to glean anything? It's probably going to show me that we've been pretty flat. So again, we're in the last week of March. So if I look at this one, so if I look at the date, I really was coming down from the end of February to March 3rd. That constitutes the majority of that red line. The wick they're saying is the week ending March 10th. Last week we ended March 17th with a low of about the low there being primarily 68, 89, and now we're up here just above the short-term moving average. So we are starting to turn the corner. We are effectively going longer. Totally bearish, meaning we're not in a weekly candle where everything is going down. However, I will stress, you have a couple of big red candles that indicate we have gone down a lot, and it's going to take a lot of work. So most people mark off highs, and they do it by simply taking the chart tool and drawing from the highs like this. And so clearly we want to be careful because it could mark a position of change of direction. So if the stock goes above this line, people will sell, and we sometimes look, and we did start off. It is certainly not out of the realm of possibility that on a weekly basis we pull down. I think the big level of support is the blue line here. So I go over to my chart and I hit save. This is the art of trading. There are hundreds of stocks that you can do a similar analysis on in your free time and have a guideline for where you are and where you think you should be. So there's not going to be a lot of buying when a stock is looking like this. It's in the channel. It's going to happen primarily when, boundary lines were broached. And even then, it's going to. So we are in a bearish trend until that line is broken. What are we seeing? Because the 1 month might tell me something that I didn't otherwise see. It's going to show me the trend lines on a shorter duration. Like, okay, so we're above the yellow line, which we've determined. We're above the red. We're above the blue. On the monthly and the 30-minute, we've been kind of steady. No major fluctuations or volatility. I love to see that. I wanted to show you that because I wanted to show you this stability. The stability has been at this range. We'll call it the $74 range. That's stability. It's over the red. It's in a range toward the bottom of it. That's not great. We had said it could go down a little ways. Don't know why that line isn't showing. It's okay. It may be a little further down than this. So we'll toggle back to this one because I think it's important to compare that with a more average stock. And a more average stock might show some compelling reasons why there have to be distinctions drawn not only by stock but market, or worse than stocks in another. And you want to focus obviously on the information. I think a lot of people look at stocks more on the bullish side. I respect that. I'm open to going both ways. So a stock that I've been looking at that seems to be sensitive a little bit to tariffs is Amazon, and I think it's important for us to look at it in the same manner that we looked at before, where I'm going to do something similar here, just like a college course for an hour and a half. All right, so Amazon, we're going to do the same thing. I'm going to take a peek out at 3 years. It's closer now to, 160, and it's now at 205 for $45. 10% of 160 is 1661. Okay, so I've done a lot of the analysis, okay, where I looked at areas of high volume in the past. I drew them. We are a little bit above the long-term moving average, which again, that's pretty good for a stock. So overall, I'd say this is a good one. And what we were doing is looking at the 3-year first on daily, so you can see it without all that mess. And the daily should give us an idea that we're in a bear trend. But not only that, I want to see a monthly level. Are we going down the way we were doing with the other one? Because most stocks, I think, over the past month have been going down. So it would appear, if I'm not mistaken, that not only are we going down, but we are on the second, bear, we're on that second bear month. Look at that. That's not healthy, and that's problematic to me. It's less healthy, I think, than Citibank. Citibank had only one red, I think. All right. So that's a bit massive concern. Let's go over to the 1 year. Again, we're learning technical analysis. We're showing you how charts can look when they are properly sliced and diced. This one is properly sliced and diced and very confusing for you guys, but we talked about connecting the highs. We talked about drawing lines and points of resistance. I was drawing a lot of trend lines here for practice. Long-term moving average, which is not what we saw in Citibank. And on the 1 year, let's see if we can actually analyze why all these lines are so important on the weekly, because there's a lot of ranges right here. And let's zoom in a little bit further. I go to the 6 month, get a little bit more clarity, hopefully, and it'll really start making sense here, where I've drawn a downward sloping line. Okay, it had the short-term moving average for the first time. There is a line that I drew from a period of what I saw as past high over here. And so we're right in a range where we were, 4 or 5 months ago. That looks like it's about November. Okay. Yep, November. So in November, we were in a range from here, here. And when I say here, you can look at the values that say on the top left, EMA, and open. So 214 is where it opened, and it closed at 211 on that one day. So 204 minus 211 is a $3 move. So 214. So 2 is above where we are today. So on the 2-month, and we're in no man's land. I don't like that. I think that's teetering on disaster. More sense of these charts because they are doing a lot, and it's going to take a lot of honing in on to understand why these lines mattered to me. We're trading above the short term. We're in perhaps a range. The range is up here at 213, 214. They're drawn when there was an intersection here. So we're doing okay. Is it a long-term play? Well, if it's a long-term play, it's got to go way up to here. If it's a short-term play, we're hoping that it's going to fill this gap from Friday a little bit close. Make sure that we haven't missed anything. So on the 1 month, as I said before, it's a little easier to read. We're over that yellow line, that month long-term average that happened on Monday. We're over it. We're still over it, like we are with Citibank did the same thing. So these two, and they're healthy. And this one might be more vulnerable, I think. And these lines again are going to show you that the recent trend, okay, like last Wednesday to Friday, we had a range, and it was between this line here and it appears this year. Well, the yellow lines are always the ranges. The shorter term lines, I think, we're trying to capture, are we in a tighter range? And we are. That range is less than $5 down. This indicated where the higher highs were going down and where I thought we needed to break before we could think about being bullish. It broke here. We started getting bullish. A lot of people decided to take a break and say, let's go for it and gamble. The little red line I drew, looks like I drew it at the end of the week to show you that there were lower lows, higher lows, and that even those were broken to the downside. They were broken to the downside, at which point I extend this line a little bit. Okay, so that might be the new line in the sand. Okay, I'll leave that there. And so I'm looking at the stock and go as far down as, and okay, that's that line that I drew from here to here. It was broken. I'm going to remove it now. I'm going to click on it. I'm going to get rid of it. So I'm getting rid of that one. This is the newest low. And then if we were talking about highs, this is we know that this one was breached. I'm going to leave it on there because it still seems relevant. But even that one I'm going to get rid of, just to show you how charting can change over time. Get rid of that. Okay, so we broke, went north. There were lines already in play. They were last, which still works. Okay, and then you might draw one new line. That new line represents, this point here was a high. Okay, so this point here was a high. Our range, we're not going to make it to this 212 until we test this line. So if you're going to be real specific with Apple, real specific with Apple. You definitely want to look at this trading range to 210 as the high. And then when you look at it around here, so the range really, let me move this up a little bit. Probably somewhere like that's fair. Okay, so we're looking at a range now. Up here, we'll call it 210. Down here, we'll call it 198, 210, 198. Not it might. Okay, so without further ado, what I'm going to do is look at the stocks that are moving today, March 25th, and quite literally, the way we did it this morning simply was to look at watch lists. I apologize for that. So let me recap this for those of you that are interested. It looked a lot like the City tab. Let's recap what we were saying. We were saying that this is present week, that it's gone up, filled above a gap. The fair value gap is right here. And like Citibank, it went up. I drew some higher highs from the middle of last week to now, higher lows. That means that I'm going to test the low here and the high here. The high is 208, the low is 198. We're above the long term. The blue line's about to cross the long term. That's a good thing. But there isn't a lot of volume. That's not good. So I'm suspecting we're going to probably come back down a little bit or continue to trade sideways the way we did last week. Okay. All right. So now we're going to look at watch lists, and bear with me. Because I have to pull it up. Okay, pulling up watch list. All right, and the way I want to look at it, and what we did this morning, again, the link will be down below, was simply how to sort a watch list. And then I like to sort it by last price, because it's going to show me which stocks by price are doing what. So my bigger stocks are kind of, nothing's changed. Let's go to the next watch list. The Dow's flat, NASDAQ's flat, New York composite for the Dow is flat, the S&P is flat, Goldman Sachs is flat, Microsoft is flat, Workday is flat. Apple is sneaking up. Mart not so good, Staples not so good, Citibank going up a little bit. We looked at that a little bit. All right, so Citibank is outperforming. Is Amazon on? All right, stands out. Okay, to the downside, nothing's really too far down on that chart. We're going to go to one that I rely on a lot. I call it the social media IT channel. We sort it. Okay, we did sort it alphabetically just to get a general view. By sorting out indexes or flat, volatility's coming down a little bit. Apple's doing good, Adobe's doing good. Your heavier hitters are doing pretty good. That's sorting by alphabet. We can sort by price. We'll sort by price to look at how are the heavier stocks doing. FI as well. I've got 2 entries. I'll delete that one. Don't like duplicates. The Qs are pretty flat. Again, we're looking at the bigger stocks. Don't need 2 of those. Delete that. All right, so that's just giving us a general view. Big stocks are kind of hanging in there. Now I want to say, are there any outliers to look at? This morning they included outlier. That's really taken a hit. news, I'm going right to target, okay? Even though okay, to the downside. The downside, what do we get? Target. Okay, we already sorted to the downside. All right. Just double check. Netflix. Again, sells tools to the government to do data analysis, scheduling, all that shit. That's probably going to contract a little. Okay, nothing special here. I'm moving right along. Netflix, you can do what you want with it. Walmart, Target, Walmart, retail, that's going to be sensitive. Okay, that's all we're doing. We're having a conversation to remind ourselves we need to slow down and look at the obvious. Okay, let's look at the obvious. Okay, are we missing anything? Okay, first we'll sort by symbol. Is there any index laying around? The reason an index is at the top is because they consider the dollar sign a special character. Dollar sign indicates this is a special stock or an ETF or an index. Not on this watch list. Then I sort by price. I'm sorting in the descending order. Netflix is at the top. Adobe's up there. You don't see any anomalies in here. Rising. I think KRKR. Banks overseas. I'm going to go over that. Over and over again. It's on a couple of my watch lists for perspective. Excuse me. Yawn. Take a moment and stretch. We've been here for a while. Close your eyes. Count to 10, 9, 8, 7, 6, 5, 4. It really helps. Really. All messed up. Okay, now it's alphabetized. No indexes. Now it's sorted by ascending. Okay, Amgen, I just had it in here for comparison. It's one of those energy stocks, but I think it's worth looking at in comparison to oil. Sometimes there's correlation, other times there isn't. In this case, it appears that nothing's going on among our heavy hitters. Exxon Mobil's Oxy's doing pretty good today, but really nothing spectacular. Okay, that's good. I will pop up in the Occidental. Okay, why am I looking at Occidental? If you don't know as a beginner trader, you will learn over time that everybody knows about Occidental. You can do the research. And next time I produce a video, this time next month, I'll give you a month to think about it. There's a reason why everybody looks at market. So there is a way to automate this because right now we're doing this kind of manually. I'll go over that while this loads. I can use this little button export. It'll download something. Okay. And when it downloads, arguably I'll have I can pop open the file on my computer. And when I pop open the file there on my computer, I can use a tool to, I can use, okay, in this particular case, yeah, so in this particular case, it's Excel. And for whatever reason, I can't share my screen on Excel, which is interesting. So we know now that I have to have the information on the web. But in short, I would have hit the download, open it up, and then go side by side with all the watch lists using Power Pivot or whatever tool you have manually, and you can do an analysis. I use Power BI. I'll post a link to how I did that today using Power BI. and you can come back and visit that. All right, so we're looking at this watch list. I'm looking at it. I'm going to toggle over here. Then we're sorting by price. The default setting is ascending, so we click it twice to get to descending. Ulta Beauty. AbbVie is going down. That was a concern. CVS is going down. That's a concern. So there are stocks that are catching their breath today. And to the downside, we have Ulta Beauty. Again, not a big move. Moves seem to be kind of it's just we'll look at a couple more. We won't look at all of them because I don't use all of them. They're oftentimes overlapping. I know them by name. No clarity. No overall stunning moves. Home builders are down near yearly lows. Not a surprise. Okay. I suspected we could go down. Okay. This one we're sorting alphabetically because indexes look flat. I think we've come to that conclusion. Not a lot of action. Now I have to wait for the page to load. Let's go right to bang bang she bang bang to the negative side. UPS. All right, I'm gonna add that to my watch list. UPS. Then I'm going to tool. So in our roll, KB Homes was down slipping. The only thing up slipping was Wynn Resorts, and now it's not even that high. So I wasn't bullish today on very much of anything. What does that mean? We could be slowing down, looking down below. February watch list from 2022. Those were stocks I was looking at 3 years ago. Not funny. There are no indexes on it. I'm sorting by just teaching you how to be patient, and you're going to find. Look, we're going to find something. We're going to find something. You say, "Thank you, Ed. My God, I really, really hate the pace you work at. I really think you're a bum." You're going to thank me because I saw a stock here, and it's going up. There it is, Jazz Pharmaceuticals. Adding that to my watch list. That's why I do this. Jazz. That's taking a hit. So what are we looking at? We're looking at a bottom. We'll look at the chart later. That's why we do this. I would have had it on my watch list had it been hurting today. I'm quick over there to Jazz Pharmaceuticals. It gives you access to documents over the HTTP protocol, which is the World Wide Web, which is you need access to the World Wide Web with a browser. I can't seem to share a desktop. Forgive me, as Jazz Pharmaceutical loads, must be a lot of people looking at it. So think about a koala bear, a raccoon, and count to 5. 3, 2, 1. Do it again. Deep breath. 5, 4, 3, 2, 1. Blink, and we're back. Down $7. Today's volume was low. Price target of 190. Long, buy, strong. Morningstar. Schwab gives it a B. And you didn't know about it. It's in the NASDAQ. It's pharmaceutical. You didn't know about it. It's down. But over the year, it's been one of the healthier things, hasn't it? Yep. Of course, people always need of the machine, whether it's a pharmaceutical company, something like that. 12:29 p.m. ADHD drug. Modest win. That's in the morning and in the afternoon. People didn't love the news. That's all I see in the news. Low volume. There's probably something called profit taking going on. Profits, they don't trust it at that high level. And I've seen enough because here's that, see, here it is, right? 141. It was a little overextended after the weekend pop. So this one really did good. It's like, hopefully not head and shoulders, because that could come right back down. Okay. All right, I promised you some info. And how about this? Let's take a break. Let's reconvene in half an hour, and I'll show you what I did on my end to consolidate, because all this back and forth in real time can be a hassle. Plus, you don't have it set it up, so I have to put it up as a report. And when the websites are slow and everybody's doing the same thing, look, we're not getting anywhere fast, and I'm sure that's driving you kind of up the wall. This feels like high school chem. Look at how long this page is taking. Normally, I can go here and I can sort, right? I can sort. Sort it. Can't sort it. I need the last price. I need the symbol. Nothing's going on here. Okay. There we go. Look at that. So go run along. We'll meet you back here in half an hour. Because I can't share my screen right now onto anything that isn't web-based. That's an issue. So I'm going to have to plop it on the PowerPoint and put it up on YouTube, copy the link, and you'll have to see it later. But thanks for watching. We'll see you in a little bit. Looks like Merck is down 5%. What the hell's going on with them? I love that. I love catching stuff because that's going to tell me a lot. That's a volatile stock. So if I guarantee you we're near the all-time low for the year. Okay, so we got a bunch of new players to the downside. If you're watching, welcome. We're doing an analysis of the stocks. Sometime this morning, I'm here with you charting. If you want to put a stock to chart down there in the comments, feel free to look at it. My winner this week after doing a chart was Apple. We said Apple's got room to go down. It went down. We made a lot of money. So these people watch it later. It's better to watch it as soon as you can. You got to get into the habit of studying. Trading is a very small portion of what traders do. They spend a lot of time analyzing because of their ADHD training day. Okay. I think ADHD is a good thing because, new people just have too much information to go through in a progressive manner. So you do need a college course on this. I'm going to put one up on Udemy. You do need a couple months of studying so you can understand what is actually driving the market. It's a couple of things. It's this it's the people that are studying at the big banks. So I know a buddy of mine graduated Bates College, played SOCDEM. He's an economics major. He gets hired to do studies and tell me, how is the market looking? If the market is looking a certain way, stocks will be given a certain rating. If it's looking a different way, but then there will be the analysts of people that are math majors like myself, analysis of how much am I pricing the stock based on how is the stock performing. So there's so much that goes into it. A stool where you've got both the economics geek, okay, that's the macro. You got the fundamentals, which are basically what we just described. The math and that, the math major goes in and does price, is it fair valued, and then technical, which is let's look at these things in a business intelligence. That's what I do on a platform, and I say this is the average move per day. If it's bigger, set your options because that shit's gonna blow. I can't believe I just said it like that. Okay, that's gonna make this, this show's gonna take off now because people love to hear me talk like that. Look, we're nearly to the end of watch list, so I'm gonna work on my Power BI model. I'm gonna post it soon. It's not going to do much today. I'm trying to get into the habit of automating it so I can quickly pull up and say which stock did the best today. That's a work in progress. Look, all we have is time. We got an hour and 20 minutes. KB Homes, boom, 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 boom. UPS, KB Homes, boom, 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 boom. KB Homes, UPS, boom, 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 boom. Yep, that was already on my list in the morning. What else is on here? KBS. What else is on here? Come on, help me out in the chat. UPS. I think we just added that. Yep, we added that this afternoon. So there's a lot to look at. We're looking at percent moves that are big because a move down means we're below the average, means eventually when we rebound, it's got a long way to go, and that's what we're looking at. Get that money for the way up. Options work like that. This price target is so far away that an analyst will say it'll reach that in a year. If it reaches it in a month, people are going to want to buy it at the price it was at just a few weeks ago. Like in a month, people are going to come back and say, I want UPS at that price today. So that means somebody has borrowed. So I've borrowed, which is called I'm buying his 100 shares for I'm borrowing for 150. If the stock goes up in a month, he loses the stock because somebody gets it, okay, at that price. So in theory, it's probably closer to $400 or $500 that he's lending. It's almost like a 30% thing. It's really some video together to explain that another time. But that's how options work. Somebody's going to lend me stock. I become the broker. Okay, so the way that's a very expensive stock, but the way it goes is if this stock goes to 190 for $60 in a month, goes to 190, and somebody wants this price at 130, they'd have to buy that contract that I had signed with Vistra. So I go to Vistra. Okay, so I go to Vistra. Okay. Somebody like me, usually the broker, Charles Schwab, like myself, to write a contract today. Okay. And we go a month from now is April. They don't even have the 190 strike price, so let's do 180. So they haven't written a contract for 190. You get me? Let's make sure this. So the price of the 175 contract, nobody's bidding on it. Nobody's interested in it. But if I was to buy it, I'd need to have 50 cents per share. So a contract is 100. So I'd be paying $50. Can you believe that? So for $50, this guy's going to loan me his shares because the probability of it going to 175 is low. He doesn't risk anything, but he actually owns it. We'll just equity firm and a hedge fund. Somebody owns it and they're willing to give me $50 for it. So I'm paying it today. Let's say I buy this contract for $50 today. Okay. The stock goes up to 175 by next month, which it won't. Okay. The stock of 130 going up to 75 accumulated or appreciated $45. $45 times 100 is 4,500. Okay. The person who me, like, so me, 4,500, right? That's how much I stand to gain. Okay. So the person, me, who just owns the contract as opposed to the shares, up somewhere closer to $500. Okay. Okay. It's because it's about $1 a contract. I'm sorry. Yeah. $1. As the strike price goes closer to 175 or $45 away, that's how much it's going to increase by, about $45. So it's going to go up to about $450. A $50 investment going to $450. That's what the guy on the street is going to pay me, because he says, "Oh, Eddie, you have a contract. You have a contract. I have the option of buying 100 shares of Vistra at the price that it's trading at today, 130. So I go in and I can say, I'm either going to give the bank $13,000 for 100 shares in order to make, the 4,000, or I'm going to sell my contract, which is a lot cheaper than 1,300. I'm going to take $400 for that contract. Okay, that's options. Okay. It'd be silly not to buy that contract if you're all right. So that was a brief introduction to that. I will break it down for you further. I might, just for argument's sake, show you what happens to the value of that $50 contract. It's so funny. It's so fairly priced during a bearish market. Not everybody knows about Vistra Energy, but that thing is as volatile as anything on the planet. That's how people make money. Okay, so I'm making 450 on 50. That's 9 times. If I do $1,000 worth, that's 10,000 at the end of the day. If it comes into fruition, banks do that all the time. That's how they make your money. Listen, it's been nice chatting. We're just double checking. Gold and copper up today. All right, let me get back to work. Okay, okay, I'll show you my presentation at the end of the day. If you have any questions, put them in the chat. Okay, adios.